Hi, I'm Chris Janaszewski, founder of Rebel Commerce Solutions, growth partner to startups, helping fearless entrepreneurs exceed their revenue goals. And today I'm delighted to introduce on the Rebellious Times podcast Roberto Rivera, the CEO of Finmark, a company headquartered in Miami, Florida, that specializes in providing positive cash flow solutions in a broad spectrum of corporate finance and strategic planning circumstances. Roberto, how are you, sir?
Hi, how are you doing?
Doing
Nice to
great.
meet you.
Nice to meet you. So, thank you so much for coming on the podcast today. Really interested to hear about the unique kind of services that you offer. This isn't really something we've covered in previous podcasts before. Um, Love to hear about Finmark, how you're helping customers achieve finance that maybe haven't been able to through traditional methods, traditional means, how you built your business, and kind of where you see the future of the market that you serve. And maybe a really nice starting point would be to hear a little bit about you and your background. I know you've got some really interesting stories, and I kind of love to hear how you came to be where you are now running this business.
Yeah, when I was in junior high, I got challenged that I could never become a chemical engineer. And because I was a failure in the chemical lab. And I told my professor I wanted to be a chemical engineer because she was a chemical engineer. And she said, "You would never be a chemical engineer." And after that, I was given the opportunity to skip high school and enter a university, chemical engineering, first in Brazil, then in Portugal. And then I graduated from Georgia Tech, and I also got a master's degree in chemical engineering. When I was at Georgia Tech, Procter and Gamble came and offered me a job in Mexico that was more related to marketing. So for the first 22 years of my life, I was doing marketing. Of course, when I got my job in marketing, I realized I had no knowledge of business administration. So I started to get a PhD in finance and business administration because I already had a master's. I couldn't finish it. I got promoted, and then I moved over to Venezuela where I started my own business. And then I forgot about keeping more studies. Eventually, my business was successful, but the government came, and I decided to leave Venezuela because back in 2003, I could see that the country was going in the wrong direction. So I came to the US and I started to getting a PhD in physics. I like numbers. I'm a numbers guy. But and I was helping my brother change bank. And of course the banking in the world is very different than the banking in the US, which is highly regulated. And here I learned how to change people from banks. And my brother didn't want me in his company, so I started working for the state of Florida in a company that was helping always companies that had problems that could not get traditional financing. And then I worked there for 8.5 years, and then I decided to start up my own company that was 11 years ago. And I'm here. And what we do is we find solutions where other people don't find it. Not necessarily expensive solutions, just things that we pay attention to detail and we try to provide companies with positive cash flow. So I have basically two types of customers: those who have a problems and they cannot get financing, and those who are doing okay, but then suddenly they get a huge increase in orders and they don't know how to accommodate them. So we are not restricted to work in the US. We have help customers worldwide. And basically, all my customers are either repeat customers or referral customers. I don't really advertise my company. I always start all business with an NDA, and basically all my transactions are confidential.
Thank you. Well, I'd like to say thanks for sharing the story on your background. So you've lived in a lot of places. You experienced finance and life in many different places, and bring a lot of experience there. And this is really intriguing when we're here getting finance for companies that are struggling to do it. Obviously, the use case you mentioned where, if they're getting more orders than they can handle, I mean, that's a great signal from a business, right? That they've got some great demand. So I'm sure you're keen to finance those. Love to hear a little bit more about kind of what types of businesses typically you help get finance, and if there are any other?
In general terms, let's say you have a company and they go to the bank and they ask the bank to give them $5 million, and the bank gives them $5 million, they're not my customer. Now, let's say that they buy inventory and they cannot sell it, then they become my customer. When companies have, I have seen most cases of people who have struggled because they don't understand the real reasons why banks deny loans. And sometimes the banks are not very forthcoming when they do that. And not only banks. I work both with banks and non-banking lenders, like factoring companies, purchase order financing companies, non-traditional finances. And now, more recently, with crypto hedge funds that are able to raise funds with crypto, which is a different way of borrowing money nowadays. But typically, the key is to be able to pay attention to detail and to see things where other people fail to see them. A credit is based on basically on three C's, like of Charlie. C number one is character. You cannot lend money to someone who has a character problem, who doesn't want to pay, or who has other types of problems. That's the most important thing. The second important thing is you have to have ability to repay your loan. I mean, if a company is making a profit of $20,000, they cannot borrow $2 million, $3 million, because the interest rate is not there to pay it off. So you have to prove that the company is able to pay under maybe future circumstances any loan or any past debt. And number three, and then we call that usually coverage, is the C of coverage. And the last C is collateral. You have to find collateral. And sometimes it's not easy to find collateral. Sometimes the government can give you collateral. That's what the SBA loans play such an important role when you talk about small companies, because the SBA and Exim Bank and other institutions provide collateral. Sometimes when you don't easily see it. But typically a collateral is easy to see when you have a fixed asset, like you have a property, you have equipment. But when you have moving collateral, these current receivables, or you have cash, or you have inventory, that's a little bit more tricky, because it's collateral that is changing from purchase order to inventory, from inventory to receivable, and then back. So to capture that in a loan, that's a little bit more tricky and more difficult. Those loans are called asset-based loans. And typically a company, when it's able to get a loan like that, it's, in my experience, it's able to increase its business for about 400% in the next 2 years.
Wow.
And the profit about 10 times.
Okay. And with each of the deals that you work on and the clients that you take on board, how long does it take you, after you've committed the loan to really get a feel for if things are going as expected, and if they'll be able to pay the loan, and if the business is on the right track, or on the flip side, if all of a sudden you're seeing risk?
Well, the first thing, of course, that we do as a business is sign NDAs to protect this is the first important step, to protect the confidentiality of all the customer information, because if they are not forthcoming, if they hide from you things, that thing will bump you later on. Let's say that someone is behind their taxes with the IRS and they don't tell you that because they're ashamed. Then eventually the bank will find out, and then that might be able to deny the loan. So the first thing is just to be very forthcoming and understanding what's going on. In our company, we don't charge anything to find a solution, a theoretical solution. Once we find a theoretical solution, which we don't charge anything, we tell the customer, this is how you're supposed to solve the problem. Now they have two choices. They can do it themselves, and if they want to do it themselves, that's fine. We take a cup of coffee, we're friends, nothing happened. And if they want to hire us, then they have to pay us a retainer and a success fee, and then we help them through the whole process. We do the hand holding all the way until they close the loan, and even afterwards we give them service until the company is on track. And sometimes, many times, they hire CFOs, and we help them also train the CFOs.
Oh, fantastic! So it's a very different model than going to a bank that's kind of following a set of protocols and procedures and signing forms, but in a very distant, impersonal way. It sounds like you actually build relationships with your client and kind of keep the relationship element within the framework of the financing.
Yeah, we fill the forms or help them fill the forms.
Yeah.
We tell them how to fill the forms. Typically, we tell the customer, this is a form, fill whatever you have no doubt. Everything that you don't have in that form that you don't understand, you're not sure, leave it blank, and we'll sit down and fill it up with you.
Got it. Okay.
There are many, many forms.
Yeah.
And there are many strategies. And each case is different. This is what makes my job, in my opinion, amazing, because I kind of like crack how to solve a problem. Sometimes problems look very, very difficult. Like a case that I told you about of a customer that was managing a business. It was in computer chips. They have a very little margin, and the owners of the company decided to sell the company. So the main supplier told the manager that they wanted to start, but they could not give her credit, but they would give him the representation. So that person could not access a bank because it was a new company, and banks are very, very difficult to do, not impossible, but very, very difficult to deal with new companies. And because she was selling computer chips, the margins were very small for a non-banking lender, which is more expensive. So it looked like there was no solution. But I had another customer that had a credit line that was not using it. And because he was not using it, I said, why don't you just use it, help this customer, and then you split the profit in half, whatever the profit is. And they did. And the customer who needed the credit said, if you help me out, the first year I'll sell $5 million and I'll make $200,000 in profit. So I did help her out this mechanism, and the first year she sold $5 million and she made $200,000 in profit. So the next year she got a line of credit with the bank for $1.5 million.
Fantastic. So
business is still open today.
So that's
I have another case that they called me and they told me that this was a person who was doing a traditional printing, and some broker told them that they could get him a $5 million SBA loan. He would have to buy equipment worth $1.5 million. He would get $500,000 of working capital. The broker charged him $500,000 commission, which was outrageous, and then the balance was put in the purchase of a property. And he went there, and then he found out that there was he could not hook up the electricity to his machines. So he ran out of working capital, and he was about to close his business. His business was gone. And so I had to go and get him some cash with a very expensive cash. They're called merchant cash advances. We charge an outrageous money, but at least would keep him alive. It's like someone going to the ICU, and give him some cash so that we would go to the next step. Then I got someone to do factoring for him and another company to do purchase order. And then I negotiated with all his suppliers of ink, paper, and so on, that they would get paid with future profits. Then I went over to the SBA and I told the SBA that we couldn't get paid principal, but we could only pay interest rate. And he followed my recipe. And within a year and a half, he already had an EBITDA of plus $1 million, and he rescued his company.
Fantastic. It sounds like you really enjoy your work, Roberto. It sounds like you really relish the difficult challenges and getting to,
I become part of my customers. Even when I sit with the banks, they know that I'm on the customer side. I always tell them I'm on the customer side, and I typically I don't do what people call double dipping. In other words, I make all my income from customers, and I force them to pay me a retainer. And if they don't want to pay me a retainer, it's very simple. I tell them, look, these are all the 3 brokers. You can call them. They only charge success fees. Go ahead and talk to them. You're not my customer.
Yeah.
But if they pay, they know that they're paying for something, so that obliges them to deliver documents, to get things done so that the money not get wasted, and in the end it is a big benefit for them. I charge very little rates for my success fee, and typically it depends on their ability of the customer to give fast responses to get a loan as fast enough. Typically a bank will close a line of credit within 60 days. And a non-banking should do it within 30 days. In the United States, there is a whole spectrum from super expensive, they call it merchant cash advances, which charge something they call factoring rate, which is double the regular rates of banks. But it's very misleading because they tell the customer, I'm going to charge you 20% or 10%, but they have to pay every week. So if you give, let's say $100,000, you borrow it from a bank, and the bank says it's going to charge you 10%, then at the end of 1 year, you give the bank the $100,000 bank, and it charges you $10,000 for the $100,000 loan. But in a merchant cash advance, you have to pay every week. So that 10%, actually, you should average it at half of the year, you already owe $50,000 because you're paying every week. So in reality, the customer is paying 20%, not 10%.
Okay.
And that's how they get away by trying to dislodge themselves from the laws that the states do for overcharging customers with interest rates. Because that's another way that sometimes you can contest a loan that it's bad. If a contract is very one-sided, there are laws, at least here in the state of Florida, where you can challenge the loan because it was done on a very one-sided. So usury in Florida is everything that it's charged over 18%, except for credit cards. They have another rules.
Okay. So the laws regulate how much can be charged and classify it differently based on the percentage.
Yes, and different states have different laws. Some states actually have no limit, and therefore those companies base their documents on those states where they have no limit.
Okay. And then how does the US compare to international markets in this respect?
This is the best place to borrow money in the world. Thanks to the regulation, so that are in the US, the banks in the US are highly under leveraged compared to, for example, European banks. European banks, according to my knowledge, they are leveraged about 166% of their assets, whereas in the United States it's 72% of their assets. So that allows the US banks to be able to lend money. The biggest problem in lending with banks is the regulators. You have to pay attention to what regulators do, because if a regulator comes and classifies a loan, it will oblige the bank to deposit the same amount in the FDIC, and the FDIC pays very little interest rate, so the bank will actually lose money. So you have to see the point of view of the regulators. One of the biggest problems people have here when they talk banks is they don't understand them. They want to think for the banks, and one of the things that I tell my customers is, don't think for the bank. Let the banks think by themselves. Think for yourself.
What do you mean, think for the banks?
People say, oh, well, if I do this, the bank will think this, and they will do this, and they will do that. That's horrible. I tell the people when they hire me that everything that they learn about the banks, to put them in a little piece of paper and then throw it to the garbage, because that's why they hire me, to take care of banks, because that's what I do for a living. I know banks. And I don't work with any particular banks. I work with many types of banks. And there are banks suited for different customers. There are banks that are suited for large customers, and there are banks that are suited for small customers. There are banks that are specialized in real estate deals, and there are banks that are specialized in international business. So typically, there's a lot of people who get loans on real estate. I don't add too much value, except when they have two problems. When the loan to value is very small, or they don't have income stream, or it's a construction loan. And then that's when I can help. but I don't really add much difference on a regular real estate loan versus a regular mortgage broker. Now, where I make a difference is when the assets are not fixed, when they're current, when they're moving targets, when it's purchase order becoming inventory, inventory becoming invoices, and invoices getting collected, and everything is moving. All those moving parts. That's when loans are a lot more difficult, and that's when I can add a lot of value.
Got it. Okay.
A lot of brokers, what they do is they have a lot of customers, and what they do is they have 70, 80 customers, and all they do is ask for a set of documents. They give it to a friend who is a banker and hope everything goes okay. And typically, in my opinion, their success rate is like 15%. They hit 1 out of 7.
Success
I
rate.
usually,
What do you mean by success rate?
in other words, if they have 100 cases, they would get 15 cases success.
Okay.
I don't have that many customers. I only have 10, 12 at any given time. And when I try to get a success from my customer, my batting average is between 80 and 90%. It's not 100%, but typically it's close. Sometimes I don't close a loan. Has nothing to do with me. Like there was a loan that was given to a company that was importing a fish, and I couldn't get the loan because the owners started fighting with each other. So even if I got the loan approved by the bank, I could not make the loan close. So sometimes there's nothing to do with me.
Yeah. They were fighting over the fish.
They were fighting over percentage of ownership in the U.S.
Yeah. Okay.
A lot of problems that I see is that there's couples, that have a business, and they're apparently happily married. The moment they get the loan and the business becomes very successful, they get divorced and they start fighting.
Oh no. Well, that's not what we want to hear. I did a podcast
It's a
recently.
lot easier. Yeah, it's a lot easier to fight when you have a lot of money than when you don't have any money, because when you don't have any money, everybody runs under the same discipline.
Yeah. No, I was
That's
just
what I have learned.
I was just saying I did a podcast where it's actually a couple that are the founders of a software company, and so we went quite into detail about how to successfully maintain a marriage and a business at the same time. So those are the stories I like to hear. I don't like to hear the stories of kind of people suddenly making money and that changing the way
Well,
their
I know a
relationship is.
story. Yeah, I know a story. They were not my customers. They were my friends. It was a long time ago. The couple had a business. They got divorced. They worked together for 3 years, and they got remarried again after 3 years.
They're married to the same person?
Yeah, they got remarried again.
Oh, well, that's a nice
Three
story.
years. They never quit the work, and after 3 years, they married again. And I know another case from another customer who remarried after 19 years.
Wow. So the grass always isn't greener on the other side, right? It's
Maybe it's a long journey to find out the best was where you originally started, right?
yeah, yeah. Oh,
It's all about common sense. If you ask me, what is the secret of of succeeding? Well, I don't know. It's a matter of some people find things that will basically satisfy some need at a competitive level, and they create companies. And typically, these people are big salespeople and not that necessarily very organized. And at some point, their businesses grow, and then they require someone with more rather than intuitive and analytical intelligence to help them organize their business. And I have found out that people who are highly analytical are not really big drivers of starting businesses. But people who start businesses, they find an opportunity, and then at some point, the growth of the company takes them to a certain position where they have to decide what to do. So typically you have two choices. You can either do it by yourself or you can get a partner. Now sometimes the partner can be anybody, or it can be a bank. And I believe that the best partner is the bank, because the bank doesn't really want to get much involved in your business. The only thing that the bank wants to do with your business is actually give you good sound advice, because they want you to repay your loans. Makes sense.
I've never thought of a bank being your business partner, right? I've thought of them providing you with money and then
We have two partners. The government, we have to pay taxes, but they provide our social environment, security, and whatever. And then we have the banks. I think that the best way to look at the bank as a partner is a very successful strategy, because
Okay.
you if you do show respect to the bank will probably come back and give you good ideas, and because they have a lot of experience, they see thousands of customers, and they're well meaning because they want to get their loans repaid.
Yeah. Hmm.
Just don't be afraid of them. A lot of people are afraid of talking to a bank. They think that they say something, the bank will do something bad about them because they don't understand them.
Yeah, I think people view banks as kind of being cold, looking at the numbers and they'll take your house off you if things don't work out. Not so much as a strategic partner to give you guidance on running the business.
Banks is a combination of two things. It's an institution, and there is the physical people, the bankers. So, understanding banks and the way I usually do my business is when I need someone to get a loan, I go to a bank, and then I go to a bank that I know well, because then I know if I get it, if I succeed, then that I got my problem solved. But if I fail, then I need to do forensics. I need to find out what went wrong. So then when I go to the next lender, I've already figured out how to cure it, or what type of lender could have an appetite for that type of loan. So it's very important to do forensics. I just have a recent case now where I went to a bank that I know very well, and after a long period they denied me. And I found out that they denied me because, number one, they thought that the inventory that my customer had was difficult to sell in the case of a liquidation, and because my customer usually gave long terms to their customers. So I went to another lender who was very experienced, and I said, look, I got this customer, I got him credit insurance that is valid for 120 days and up to 150 if necessary, and this inventory could be liquidated in such a way, and actually their toughest competitor is also here in Florida, so it's not so difficult to liquidate. But I knew what the problems were, so I'm right now in the process of getting approved. The lender did a field exam, which is very typical. They send an examiner, which I usually oversee the audit, and it was a very successful audit, and now we're in the final phases of probably closing this loan for this customer.
Fantastic.
Yeah, sometimes people have a bankruptcy and believe that because they have a bankruptcy, they don't have the right to a bank loan. And not necessarily, because it depends on the reasons you had a bankruptcy. If you had a bankruptcy because you were young and you didn't understand and you started a business, or someone stole money from you, or something happened that was out of your control, it's one situation that you can probably cure. So I help the customers by drafting the explanatory letters to the banks about what happened. Same thing happens when someone is past due with the IRS. I have to help the customers write the letters explaining why they became late with the IRS. It could have been because of the COVID. And a lot of people don't know, but the SBA will actually accept the payment plan and still give you a loan.
Okay. Interesting. And how does I am so the perspective you've given me here is quite different from my preconception, right? I imagined it's all kind of binary within the banks, the decision making now. But it sounds like there's a strong human element in there where you can put share your position and the rationale and the reasons for your circumstances and get a positive outcome. With the introduction of AI, do you think this is going to change? Do you think banks will suddenly, risk taking out the human element and allowing AI LLM solutions to, actually start making the call as to whether or not the customer gets approved, or how do you think this is going to play out?
I am pretty sure that the big banks use AI to approve customers on a massive basis. There was a big bank, I don't want to name its name, but it was a very big bank, and their name one time a person who wanted to take care of small loans. And I asked her, what happens when someone goes to a bank like that it has a lot of little stores, little banks all over. And they go and talk to the branch manager, and the branch manager says, fill the form here. And they fill the form, and they says, okay, you have to pledge all your assets, and you got approved. Something between $50,000 and $250,000. They get approved for a loan. They give him a loan. And then I ask that person if a human being even looks at that, and says no. A lot of banks use an algorithm called probability of default ratio, which is different for every bank, and they use that to rate the customers. And AI can rate those customers using that algorithm, and tell them, you got approved. And I believe that AI is servicing a lot of massive customers that it's very expensive to deal on a human basis.
Okay, so some big efficiencies gained there for the banks.
Yes, I think the banks are also looking to. They're also institutions who want to make a profit. It's complicated because banks. There are many types of banks, and when I say banks, it's in a general way. Sometimes by banks you can also mean non-banking lenders, which are non-regulated lenders, like factoring companies, purchase order financing companies, companies that lend on inventories, equity lenders. Those are who take as collateral the equity of your company. There are many types of. The U.S. has many creative ways of lending. So actually, AI it's taking over in many areas of banking, especially banking interrelation. Now you can go and open your cell phone and talk to. You think you're talking to a person, but actually you're talking to a robot who's answering your questions.
Yeah.
And that person will remind you, hey, you know what? Maybe you will need to you have excess cash. Why don't you put it here in a CD, or why don't you talk to the branch of the bank that does private banking, so that they can take you to a finance advisor and put money in some sort of future or stock or some other part of a portfolio. But yes, and then the other thing is crypto. Crypto is also changing because now you can raise funds through crypto very easy, where before it was more difficult. You use influencers to do that. Instead of borrowing money, you can you do something by process called tokenization. You create tokens, and those tokens can be two types. You can have equity tokens, where you actually buy something that is part of your company, or you can have tokens that are like a little bond that you rescue after a few years if your cash flow is very positive. And if you have a good project, then you get to effect. There are very few hedge funds now. All the hedge funds that are now operating here are overseas, because the U.S. has not yet approved the legislation to do the hedge funds here. What the government has done is actually lower down the regulator part, so that they can now be able to give licenses to hedge funds in the U.S. that can work with crypto and raise funds with crypto. But right now, it's on the process of this new administration to do that.
Okay. So which countries are we talking that are able to manage tokenization?
I particularly work one that has a hedge fund in the British Virgin Islands, and is fully licensed over there, and that is supervised by BDO, which is a very famous accounting company.
Okay.
No, not that many. There are very few yet. There is an avid market though. There's a lot of people who want to invest in those tokens. Those tokens are, if you have a project, the project has a return on investment. So you have to offer them a certain amount of interest back. Typically, right now, a very good interest rate is to offer maybe between 7 and 10% interest rate. If you see, for example, a bond in China, if you buy any Chinese bonds, they'll probably give you nowadays, I think, less than 3% interest rate per year. And the U.S. is having a little bit of a problem right now, on the risk rating, but I don't think you. I think you can still get bonds that get a interest rate of about around 5 or 4 or 5, maybe 6% per year.
Okay. So yeah, the US recently got downgraded for the first time, I believe.
It's unfortunate, but it's true.
Yeah.
So
Are you seeing that affecting financing? You know, how does that play out in your world?
it affects on the it has an effect on the crypto market because it's an alternative way. You know, instead of buying bonds from the U.S., you may want to buy these tokens. You may be tempted to do that. So, how do you promote them? You promote them through influencers. You tell the influencer, okay, if you put them here, we'll give you a certain percentage of tokens, and then they'll make an income from tokens, and they'll start putting them, and you know have a, and also talk to the different um, investors, you know, the family offices and so on, who are looking always to find ways to make more money out of their funds. The biggest competitor in the US, actually, you were talking about Europe, there's one place where actually money is cheaper than the US, and that is the Middle East. When Exim Bank, the people from Exim Bank told me in the US, and we get an Exim Bank deal to deal with the US exporting a good, sometimes the deals get knocked out by cheaper offerings from the Middle East. I just got a lost one deal because of that, because of the Middle East.
Okay. How accessible is the Middle East for, say, a US business?
It's relatively accessible. Everybody wants to invest in the U.S. because it's still the best place in the world to put your money. It's the safest way to put in the money.
Yeah.
No country in the world is more powerful. No country in the world is safer. And you know, other countries may have governments that are you know, very autocratic. And if the government comes and takes away your money, there's very little you can do about it. Whereas here in the U.S., you can fight, you may succeed, and I mean that's what makes America great: the ability to have laws that are fair to everybody.
Yeah. Let's hope it stays that way, hey?
That's democracy. That's the choice of the majority to be able to not only to choose it, but to maintain it.
For sure. What are your predictions in the lending environment for, say, the next 1 to 2 years in the
I
US?
think it will be very healthy. I think the U.S. economy, it's very strong. It's I think 30 or 40 trillion dollars. It's a very strong economy, and it's driven by a lot of people with a lot of interests, and I think that it will continue to strive as long as there is freedom and there is ability to bring new ideas. The U.S. economy will continue to succeed. Even it might it might have it might pass from some periods of recession like they did after the 1929 crash, but eventually it will compose itself and regain its step. There's no other place in the world that has this opportunity. Even the Middle East. The Middle East is very strong, but it doesn't have all the resources that the U.S. has.
Yeah, the
And it's
US.
of course in a much more stable, peaceful environment than the Middle East.
Yeah. Brilliant. Well, this has been wonderful. How, if somebody wanted to reach out to you to get advice, where would they go to do that? What would be the best
Send me
way?
an email. Send me an email, rrivera@finmark.us. Give me a call, 786-397-9495.
Awesome. Well, it's been an absolute pleasure, Roberto. Thanks so much for coming on and sharing your insights and experience. I'm sure a lot of viewers are going to find this extremely helpful and educational. So, have a wonderful rest of your day, and yeah, thank you very much.
Thank you. Have a nice day.
Cheers. Take care.